So if you see the broad heading is PROI and PRII. So you will not find disqualification of a PRII with a foreign citizen. Is that clear? Is it right? Any other question?
Sir, in addition to his point of view, resident in India, 8 country citizen, even if they become a resident in India, they are not supposed to buy that.
Correct.
Even if they have become a...
See, I have not reproduced the entire notification. There is a general guideline. It's a regulation 7 of the notification 21, where citizens of 7 countries who are all neighboring countries where the property purchase is prohibited. The reason is very simple. The government of India is spending billions of dollars to even save an inch of land on the border, right? Who are on the border? Our neighbors. We cannot blankly permit to purchase in the central Mumbai or a posh area of Mumbai to purchase the property. See, I mentioned in my initial note that some of the provisions are introduced through FEMA, although they are not concerning FEMA. So prohibition on 7 citizens to purchase property, nothing to do with FEMA as such. Right? So, but in order to be a complete code, they have introduced that, oh, you don't be mistaken by other laws. Here it is prohibited. It is prohibited also under the Enemies Act, Government of India. We have mentioned that the enemy cannot purchase the property. If they have purchased, it will be confiscated by the Government of India. There is also a law called Foreigners Registration Act. That every foreigner coming to India, intending to stay more than 180 days in India, has to register to the Home Ministry. Each state has a branch of a Home Ministry, registering the presence of the foreigners in India beyond 182 days. So that's about the small level and the questions. Any other question? Okay, we go to the case studies. We have devised about 14 case studies. Also, it appears 11 case studies. Attempt is not to solve all the questions, because possible leads and possible answers are given for all the case studies. If you read them on your own also, you will understand that what are these answers and what are these questions, whether they are right or wrong. But the attempt here is to explain you how do we arrive at this particular answer. That is an attempt. So friends, if they are wrong also to their mind, please do not raise any question to me. My attempt is only to explain the process, that how I have arrived at this particular result on the basis of the provision of the law and on the basis of the interpretation of the law, which is to be intention based rather than the literal interpretation of the law. So that is how this questions have been raised. And again, which is subject to riders, that it is prepared by my office. And I am the fill in the gaps speaker. We are not going into detail of this case studies. When we go, we will come to know what is the case study. The first case study is overseas employment. This case study is dealing with the residential status of a person in India and the residential status under FEMA as well as under a tax law. The brief is not to discuss the tax law. However, Rashmin Bhai, in his first session, requested me that whoever considers the case study or the brain industry must touch upon the income tax law to the extent a speaker can explain within his limited abilities. So I have considered those aspects within the limited experience on tax advice. So if there are any infirmities in those things, I am standing corrected by the seniors in the audience as well as on the ASP. The first case study is, you need not read. I will explain the entire case study and then we attempt to solve the questions. Because, it is all perhaps readable, but when I drafted the case studies and the content which was going, I thought that you may not be able to read the case study, and therefore I wanted it to explain. Yeah. So if you have gone through all the case studies, I need not discuss that, what is the case study. But I will touch upon briefly what is the case study in any case. Because that will give me the further thought. See, there is a company to be planned in United Kingdom for the marketing of the products by a company in India. And the company is contemplating the deputation of one of his senior employee to the marketing office in United Kingdom. What it says, that the number of days which are required to be spent in the operation of the UK company is not likely to be more than 100 days. Secondly, it says that Mr. Lewis, who is an employee which is planned to be deputed, want to consider a residential status under FEMA to be a non-resident. He want to become NRI. That is his first brief to you in the office. That he want to become NRI. He want to take his family also abroad because his children are younger and they want to study in United Kingdom. However, his employer says that you must look into the work of Indian operations also, because which we are doing so far. So with that limited fact, the client has come to you. Sometimes they send some questions to you, and thereafter they put in additional questions when they come personally, because they don't want to write those questions, when they give you the brief in advance. So here also, Mr. Lewis, when came to the office, he added some more facts. What are those additional facts? If possible, he would like to consider dual employment. Would like to settle permanently in UK as such, because I have not said this to my employer, but I finally want to go abroad permanently. And the group also has a UK based, a Crown Colony Jersey office also doing some marketing activity for the Europe. You can consider planning my employment by that tax haven company also. So these are the additional facts which were brought to the notice. After that, I am just explaining you the exact process, how it happens. Not that I have added this fact little later, but it exactly happens in the office. So you are posed with a question, 3 questions. That how can you plan the employment of Mr. Lewis in the UK company? Employment of Mr. Lewis, a dual employment situation as his employer wants, and employment by the tax haven company. This is the 3 situations in which you have to design the employment along with the personal wish list that he want to go permanently outside India, settle in UK, educate his children in UK, invest in UK, and also want to know what are the advantages of becoming NRIs. So this is the brief fact which is also subsequently found in the office. Now how do you address this situation? Now our brief is not to save taxes, avoid taxes, etc. Our brief is to how to handle this situation carefully in a law compliant manner. So when you look at the definition of residential status of a person resident in India, section 2B of the FEMA, there are 2 alternatives. One is by physical stay outside India more than 181 days as specified in the section, you can become non-resident in the next year. Is that clear to you? If you want to become non-resident Indian, immediately you use those 3 exceptions. That you are a resident of India, if you stay 181 or 182 days plus 181 days plus. In a preceding financial year, then you become resident in the next financial year. Or if you want to become a resident in this year, you should have stayed outside India for 181 plus days. However, if you want to become resident the next day, you explore one of the three alternatives which are mentioned as an exclusion to V1. So therefore, one of them is employment, another is uncertain period, and etc. So your advice is, okay, if you want to become non-resident Indian from tomorrow, from day one, then you must take employment with a UK company immediately. However, if you can delay your decision and you don't want to take employment, perhaps only by staying 181 days plus in the United Kingdom, you can become non-resident for the next financial year. So, if you want to postpone, then no need to take employment. You can still continue working in India and you can still become non-resident under 5 months. Is that clear to you? Yeah. Is there any question on this? So you had two options with you when you want to plan the employment with the UK company. The dual employment. So you can become non-resident immediately or after some time. There is no difficulties. You can advise Mr. Lewis, yes, there are no difficulties. Then we come to dual employment, which is what the employer wants. When you come to dual employment, it is basically a division of exercise of employment contractually. Division of duties contractually between the two companies. The UK company also employs him and the Indian company also employs him. Very simple. If both the company employs Mr. Lewis, your immediate conclusion is there is difficulty in the establishing the intention of Mr. Lewis, and therefore we will straight away will be able to tell them, please don't plan dual employment, because it will create an immediate situation of intention based definition. So therefore avoid planning dual employment as far as possible. Then we come to the alternative for working in India as well as abroad without disturbing the intention based definition. How to do it? The alternative for that is, your employment is in UK, you are required to travel to India under the employment condition from time to time to work for the UK company or an Indian company, as the case may be, you want to draft the contract. See, in real life, when you are going for marketing abroad, you are also actually in a current time responsible for how the companies are manufacturing these goods, how the companies in India is operating the SOPs. Let's say, for example, the Walmart and Tesco kind, if they outsource, let us say for example, Indian pickles from particular manufacturing facility, not only they will look into the products, they will look into the facilities, they will look into the SOPs, that people will be deputed to oversee the functions of the Indian company to see that they are doing it properly. You have a judgment in Morgan Stanley that they were here to look after whether they are delivering proper jobs or not, for the purpose of the business of an Indian company and not of the foreign company, or a foreign company or an Indian company, whichever way you are looking at it. So therefore, there is a possibility of applying the employment with the UK company for an extensive travel to India for the purpose of the employment in UK and not in India. So that solves the problem if a gentleman want to travel to India. So therefore, now we are coming to the tax issues. What are the tax issues which can come forward in planning his employment in the manner in which we have discussed so far? Tax law clearly mentioned, section 6 of the Income Tax Act, that if you stay in India for more than 181 days, very clear. If you stay in India in past 4 years, 365 days on an average, and in the current year 60 days, you still become resident. Therefore, if Mr. Lewis were to stay in India for more than 60 days, he will still be regarded as resident Indian because of 60 days stays in the current year and on an average 116 days in the past 4 years. 116 into 4 is 364 days on an average basis. Therefore, he will still be regarded as resident, but for the explanation to below section 6, that if a person is a citizen of India and going abroad for the purpose of employment and stays outside India or stays in India, then the test of 60 days has been extended to 180 days. And even if he stays more than 60 days, even if he has stayed on an average more than 160 days in preceding 4 years, he can still stay less than 181 days or 182 days and be regarded as a non-resident under section 6 of the ITA. Now, what is the possibility therefore? See, one of the fundamentals of Indian resident test under the IT Act, I stand corrected if I am wrong, that the law does not require you to be resident of any other country in order to entitle to be non-resident under the Indian tax law. The law, Income Tax Act, does not require to be resident of any other state or a country if you want to be a non-resident of India under the Income Tax Act. Only law requires a residential status if you were to use tax treaty and not otherwise. Is that clear? Yes. So therefore, if you plan the employment of Mr. Lewis in a tax haven called Jersey, and you could plan his stay in United Kingdom less than 90 days and also less than 181 days in India, he could be a non-resident of all the countries, although he is employed by the UK company. UK has a typical test of taxing the income. That if income is earned outside UK, it is taxable in UK only on the basis of the remittance. If it is not remitted to UK, it is not taxed. And the typical test is on an average 90 days stay in United Kingdom for 5 years. So therefore, it is possible that you can plan some work in Jersey, some work in UK, some work in India as a group marketing person or a group marketing director from Jersey and do entire work being a non-resident of all the countries. However, you have section 9(2), income deemed to accrue or arise in case of a non-resident, that any salary earned in India will be taxed in the hands of the person who has exercised the employment in India. The law is amended after the judgment in S.G. Natale's case, CIT versus S.G. Natale's 124 ITR. Prior to that, only if a liability to pay arises in India for an employment compensation, then only salaries were to be taxed in India under the previous law. The liability to arise, if it accrues outside India, the salary was not required to be considered as accrued in India. So therefore, after the law amended, consequent upon 124 ITR, you have to be little careful that if he is exercising his employment in India, he may be taxable in India for the part of the compensation attributed to his work in India. Because he is doing work of an Indian company, if not UK company or not a Jersey company, in that case, it accrues and arises in India, section 5(2) itself, you do not have to travel to section 9(2). This is my understanding. Therefore, he could be regarded as a non-resident under FEMA as well as non-resident under the tax law.
constitute agency B?
Yes, please.
Would it not constitute agency B because deputation of foreign employee in your...
He is not deputed. He is coming here for the work of an for the work of the Jersey company from time to time, as any other businessman would come.
Presence would not constitute service fee.
In service P, the responsibility of reporting and reward will be to an outside non-resident, and whether he is providing any service to the Indian company. That will be the test. He is responsible for the risk and reward to a person resident outside India. Therefore, you can say it is deputed. But whether you can prove that there is any service to the Indian company, again, Morgan is telling may be useful for different reason or wrong reasons. Of course, I don't want to enter into the tax questions anymore, because I don't claim to be having any abilities to answer those questions. Is that clear to you, Hirenbhai?
Yeah.
Some substance in my response? Thank you. Any question on this?
Sir, on the dual employment, you are trying to say that every time when he moves outside India to the UK, he will be a non-resident. So there will be always flip-flops from a perspective.
He is coming to India only for the purpose of employment under the Jersey contract. He is coming to India because Jersey company is asking him to see the stewardship function, popularly phrased in Morgan Stanley. Is that clear to you? Or it doesn't answer your question?
Yeah, I was on that part. You had mentioned whether you can structure his employment as a dual employment.
I said that is not the purpose which serves the Mr. Lewis, right? Mr. Lewis says, I want to become non-resident Indian under FEMA, isn't it? So our entire effort should be to make him non-resident Indian under FEMA rather than looking at the tax issues, isn't it? In any case, he will pay taxes in one case or more case, in either UK or in India, right? But as I told you, Dil Mange More. So he said whether you can plan in tax haven. So that's the the beauty of extending the Dil Mange More further. Is that clear? Any question? Okay. Now coming to the incidental benefits which a non-resident will gain by becoming an RI. What are those gains? Very simple. He is able to consider his taxation from the perspective of either Jersey or a UK law, which is far superior than the Indian law. Because India taxes worldwide income, UK does not tax its worldwide income, Jersey does not tax its worldwide. We will not go into the details. The apparent benefit. Then the second benefit, he is able to get advance ruling under the Indian income tax law. The third benefit is he can bring in 10 kg of gold and 100 kg of silver at the concessional rate of duty every time he comes within or after the completion of 6 months outside India. Then he can take advantage of NRI quota in various education institutes where the competition is not stiff. In the exam like CAT, exam like IIT, etc., where there are specific quota on non-resident. So that can be helped. Then when he comes back, he can buy immovable properties outside India which he is not able to buy. Isn't it? Then he is able to retain all the properties in India and enjoy it also whenever he can do so. He is able to remit $1 million every year instead of $75,000 because notification 13 comes to your rescue and not a notification on LRS. Now, one advice on $1 million scheme. When you want to settle abroad, you normally want to take back your money also abroad. The $1 million scheme is not available to you if fund is not owned by you and the taxes are not paid by yourself. So before going abroad, if his plan is to take all the money abroad, the Mr. Lewis may execute gift in favor of wife and children, which is tax-free under section 56(2), to effect remittances after he becomes non-resident. Otherwise, after becoming non-resident, the gifts to relatives is also restricted. So, keep enough funds with a family so that they can take $3 million every year. Once the $3 million is taken by Mr. Lewis with an employee, I believe he will be able to nullify or rationalize entire tax payment in India. Is that clear to you? Then he can hold properties in India, he can continue banking account in India, he can open banking account outside India without any restrictions. He doesn't have to inform under a tax return what he owns in outside India, where he is signatories to the bank account in India, etc. He can avoid completely the so-called tax treatment which a citizen of India gets in India. Sorry for that remark. He will get a preferable treatment outside India, that's what I'm saying. And then, if he wants to come back to India, he gets a 7-year benefit from wealth tax if the properties are purchased out of the earning from abroad or out of the wealth abroad. Perhaps wealth he took from India under $1 million scheme also will qualify for that particular wealth, which is exempt for wealth tax in India. Also, a $1 million scheme. You don't want to invest outside India, you want to invest in India. Invest in NRE fixed deposit. If you are a NRE, non-resident in India under FEMA, not required to be under a tax law, entire income from the fixed deposit will be tax free. So, on next day, you can make entire wealth funds into a tax free securities and you can earn income tax free as long as you want under the NRE fixed deposit, section 10 into bracket 4. With that remark, friends, I have come to the end of my first case study. Everything is written in this case study in detailed manner, so you can read and relax whenever you want to read. Tell me what is the fault in this. No need to find out any fault now. Then I also mentioned about NOR. That NOR requires little lower number of days on an average basis in last 7 years, which is 104 days only. Whereas residence under section 6(2) requires 116 or 14 days. 16 days. Just to tell you what is the mindset of the draftsman. That if you are an NOR, let us keep little less number of stays on an average basis. And if he is resident, let us keep little more number of days on an average basis. Perhaps that may be the intention, I don't know. But I always want to understand the law in the logic, in the spirit of the law in which it is drafted. So easily remember, and no need to look at the definition again and again. These are the discussion and the answers which are provided and the citation on 2024 ITR. You must read the judgment to plan the employment. One more advantage I have mentioned is setting up a trust abroad. Next case study, travel abroad. When you look at the question, travel abroad, a very simple question, right? Very simple question. Then how much a foreign exchange can you draw when you travel abroad? I simply say $10,000. But when you read the law, when you read the provision of the law, there is enough relaxation available. There is enough available resources if you want to see the law differently. If you see the international